When the economy is in trouble, gold tends to go up big time. In response, you can sit on the gold bars, or perhaps you can make that gold work for you and generate a little income. Fasten your seatbelts, folks. This is going to be a good one. Gold has always had a bit of a reputation for being the sleeping giant of investing. During the good times, gold doesn't promise those flashy returns we see with tech stocks, and it can be rather boring if I'm completely honest. However, when the world gets messier and the you know what is ready to hit the fan, gold rises to the occasion and, well, it proves why it's pretty much a hedge against everything threatening to eat away at your money. In a nutshell, it can protect your wealth. In 2025, we sure do have, oh boy, we really have a messy world for sure, with rising geopolitical tensions. We got Trump and his tariffs and whispers of a recession that, well, it's been growing a lot louder lately. Investors are scrambling for safety, and gold is once again stepping into, well, right into that spotlight. So here's the plot twist. You don't need to bury bars in your backyard or even, time the price of gold perfectly. There there is another way. Thanks to a new wave of Canadian listed gold ETFs, you can get all the benefits of gold: stability, wealth, protection, and, well, peace of mind, with added features like monthly income thanks to some covered calls and, well, an overall smarter diversification within that gold sector. Today, I am going to break down five of the most powerful gold ETFs available to Canadian investors right now. Some are household names, others are more, well, they're more newcomers, but all of them offer a different way to hedge your portfolio and generate real returns even in these uncertain times. A sub to the channel makes future content a doggone certainty. In qualifying for this list, the ETFs I looked at, of course, had to be gold ETFs, and they needed to have, they needed to have some amount of income, with a priority for more income focused ETFs for sure. Today's list is, of course, sorted by their 1 year total return. So without any further ado, let's do this. We're going to kick off this list at number 5 with the Global X Enhanced Gold Producer Equity Covered Call ETF. It's got a ticker of GLCL. This ETF is designed to unlock the potential for some of the biggest North American gold producers and, well, with the help of covered calls and up to 25% leverage, enhance their overall yield. At the time of recording, their price coming in at $20.42, and they have an NAV of $20.44. Those assets under management, 2.55 million. Their management fee coming in at 0.85%. Now, we do not have a management expense ratio because this is a brand new ETF. When we look at their returns, they do have a yield of 9.447%, monthly dividend of 16.1 cents per share. As I said, this is a new ETF. They just launched in April of 2025. So we really don't have a lot of data for it. However, it is the leveraged version of GLCC, and we do have a lot of data for that one. And you're actually going to see that one in a higher position on the list. So for what we do have for a 1 year ROI, and this is more like a like a month and a half ROI type thing. It's 2.36%, total return of 3.16%. Nothing on a 3 year annualized. They have not even remotely been around that long. As I mentioned before, this is a new ETF, and you do have to take their meager returns with a grain of salt. I actually think if we did this list a year from now, they would have a much higher ranking for sure. Okay, let's move to number 4. We've got the Global X Gold Yield ETF with a ticker of HGY. This ETF is holding, well, a lot of gold bullion, and they are writing covered calls on it to provide investors with a wee bit of income at the same time. So at the time of recording, their current price coming in at $13.26, and they have an NAV of $13.25. Those assets under management, 111.87 million. Looking at the fees, we get a management fee of 0.60%, and their management expense ratio 0.89%. This one does have a trading expense ratio as well, and that's coming in at, well, 0.09%. Switching to their dividends, they have a yield of 4.898% monthly dividend of, well, 6 cents per share. Their returns on their 3-year return on investment, nice looking 162.06%. Factor in those dividends, total return 196.07%. Looking at them this year, their 1-year return on investment, 25.33%. Add in the dividends, total return 31.47%. And their 3-year annualized, a really nice looking 43.59%. More more than any other on today's list, this one is tied more closely to the price of gold. And that could be, well, that could be a very attractive point for some investors for sure. In our number 3 position, we have the Hamilton Gold Producer Yield Maximizer ETF with a ticker of AMAX. This ETF holds an equal weighted basket of large cap gold producers, and then they employ a covered call strategy to provide some nice income for their investors. At the time of recording, their price is coming in at $24.41, and they have an NAV of $24.26. Those assets under management, 224.80 million. All right, let's look at the fees. Management fee 0.65, management expense ratio 0.80%. Switching to their dividend, they have a yield of 8.431%. That's a monthly dividend of 19.5 cents per share. All right, let's take a look at their returns. On their 3-year return on investment, 53.81%. Factor in those dividends, total return 70.59%. On their 1-year return on investment, 25.05%. Adding in the dividends, total return 35.54%. That 3-year annualized 19.49%. I love Hamilton, and this ETF in particular does come up quite a bit on the live stream. So I know some of you are already big fans of this one. All right, let's take a look at our almost top spot at number 2. It's the CI Gold Plus Giants Covered Call ETF, ticker of CGXF. This ETF holds an equal weight of the 15 largest gold and precious mineral companies in North America. They then, well, of course, write some covered calls to enhance those payouts. At the time of recording, their price coming in at $13.90, and they have an NAV of $13.82. Those assets under management, 154.24 million. Looking at their fees, management fee 0.65%, management expense ratio 0.72%. Moving to their dividend, they've got a yield of 6.518%. It's a quarterly dividend of 23.2 cents per share. I think this is the only quarterly one that we do have on the list. All right, let's take a look at their 3-year return on investment. That coming in at 22.14%. Factor in the dividends, total return 45.62%. On their 1-year return on investment, 32.89%. Adding in dividends, we do get a total return of 41.51%. Their 3-year annualized, that's coming in at 13.34%. CI Financial is one of those ETF management companies we certainly do not see a lot from, but it is nice. It is nice to see them showing up from time to time, that's for sure. All right, in our top spot at number 1, we have the Global X Gold Producer Equity Covered Call ETF, ticker of GLCC. Yes, this is the one that we said was coming up. So this ETF seeks to provide exposure to a diversified basket of big North American gold producers that are, well, they're basically the ones that are listed on the Selective North American Listed Gold Producers Index. At the time of recording, their price is coming in at $35.06, and they have an NAV of $34.89. Those assets under management, 353.18 million. Looking at their fees, their management fee coming in at 0.65%. They have a management expense ratio of 0.79%. And this one does have a trading expense ratio 0.38%. Switching to their dividend, they've got a nice looking yield, 7.871%, monthly dividend of 26 cents per share. On their returns, on their 3-year return on investment, that's coming in at 28.28%. Factor in those dividends, a total return 57.38%. Looking at their 1 year, that return on investment 33.41%. Total return 43.87%. That 3-year annualized, that's coming in at 16.32%. This is an ETF I have absolutely loved for some time. It has done well and definitely a go-to for gold and income exposure for sure. So these ETFs are pretty good for gold exposure. And I'm always curious to know if you have a favorite that just did not make my list. Drop a comment below, as I would love to hear about them. That's for sure. If you are interested in the ETF that we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey by checking out this video on value stocks. Thank you for watching, and I will see you in the next video. This ETF, they hold an equal weighted basket of large cop. Now those are the ones after the donut shop.